Good morning and welcome to Stock Market Today for Tuesday, October 23rd, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and Stock Charts TV. And you can sign up to receive a free email to follow along with this show by heading over to www.ChaikinAnalytics.com/today. So markets in the U.S. were mostly lower yesterday with the S&P 500 closing back below the 200-day moving average and the Russell 2000 close to the lows from earlier this month. In a sign that should worry the bulls, investors sold into an early rally that was sparked by a 4% move higher in China overnight. Technology was an outperformer on the day, as was consumer discretionary. The laggards were financials, REITs, and energy. And, we're kind of looking at the 200-day moving average here. And watching for a prolonged amount of time below that level, which gives it time to begin to roll over. Support comes into play 27.10, 27.20, and a break of that level opens the door to a 10% correction from the highs, which would bring you down to about 26.50. So again, outperformers tech, consumer discretionary, and communication services. Underperformers were the financials, REITs, energy, and materials. And as we get to the desk this morning, futures are down 1.3% after they finished mostly lower yesterday. Asian markets were weaker overnight, with China down 2% after a two-day rally. European equities have sold off this morning. Treasuries are stronger across the curve. The dollar is lagging most of the majors, with the biggest pullback coming on the yen cross. Gold is up about 1.5%, and WTI crude is giving back about 50 basis points today. So here's the big picture structure for the S&P 500. We closed below the 200-day moving average. Support is in the 27.10 to 27.20 zone. Below that, 26.50. Resistance comes into play in the 2800 to 28.20 zone, and then near 28.50 should we push through there. RSI shifting back to bearish ranges. This is the question that we're trying to ask here, or we're trying to answer rather. Was this oversold condition temporary? Do we bounce back, or on a subsequent retest, do we make a higher low on the RSI and then move back to bullish ranges? That's the scenario the bulls want to see. A bearish scenario would be, the inability of the RSI to move back into bullish ranges on bounces in the index. So we're watching that closely, especially in light of the fact that Chaikin money flow remains bearish and is actually turned down once again. So kind of at a key level here now, dancing around the 200-day moving average. Futures trading lower this morning, kind of the top end of this support zone that we've been talking about. I saw futures at about 27.23 this morning. So we want to see if that level is going to hold. And if it holds in a manner that creates a higher low for the RSI, that would be constructive. A breakdown, obviously, as we've said, opens the door to that 26.50 level. As we dig in today, your market in a minute, what we're going over in my note to Chaikin Analytics clients. Stocks give up early gains to close mostly lower. We talked about that. Russell 2000 testing the recent lows. We'll take a look at that one. Defensive sectors continue to benefit from rotation. Tuesdays, we go over sector rotation and what's leading and lagging from a sector level, and the defensives are seeing outperformance. In particular, utilities broke out relative to the S&P 500. We'll take a closer look at that one today. And as we've said, futures point to a lower open. Our power bars on the major indices, a little bit of moving around, but not a lot has changed really. Dow down 50 basis points yesterday, 5-1 bulls to bears. S&P 500 remains with a negative skew to the power bar ratio, giving back 44 basis points yesterday, 61 bulls, 101 bears. NASDAQ was actually an outperformer yesterday as technology led the market higher. 12 bullish or very bullish stocks for 19 bearish or very bearish stocks. Small caps, while testing support, and have a bearish skew to their power bars, 126 to 496. Interesting to note, though, down less than the S&P 500. Remember, we've seen that chart a bunch of times, the relative chart of small caps against the S&P 500, and said we were testing support. Now, that can happen in one of two ways. Either small caps can go up more than the market, or small caps can go down less than the market. Obviously, the former scenario is preferred, But I think we want to keep an eye on small caps and how they're performing on a relative basis. Bonds downtick, sending yields higher. According to the Chaikin Power Bar, small cap stocks are more bearish than large cap stocks, and the major indexes are mixed. Taking a look at our stock of the day today. I mentioned that email earlier. You can follow along and we'll generate a potential stock idea for you, or at least something to consider, as is the case with today's stock of the day, Zimmer Biomet. Medical Products Group is one we've liked within the healthcare sector, which we've identified as leadership. And Zimmer is a name that I think is interesting to have on a watch list, but not necessarily get involved at the moment. Power gauge rating for Zimmer is very bullish due to attractive financial metrics, very strong earnings performance, and very strong price volume activity. Stock does have some negative expert activity, however. We have a very bullish stock and a strong trend, but a weak industry group. A lot of the industry groups are weak. That's based on the power bars, and what we've seen lately in the market would lead to weakness at the industry level. Looking at the ribbon at the bottom of the chart, we can see we've been predominantly bullish throughout the quarter, basically since May, and more intensely since the July-August timeframe. Currently on that very bullish rating. Market and the model are in agreement. This is the type of stock we want to consider, but tactically, I just don't think it makes sense here right now, especially in light of the fact that the futures are lower this morning and the market is still trying to find a level. I think when you're looking for ideas on the long side, you really want to limit yourself to the premium setups. And while I like Zimmer, and while it's the type of stock that we want to consider, it is closer to overbought than it is to oversold based on our indicator, and money flow is actually downticked into bearish zones here. So what we want to do, and this market environment is a great opportunity for this, is we want to start putting together a list of potentially bullish ideas. Should the market kind of find that level and begin to rally, those are the names you want to look at, especially if they've become oversold. But I really do think you want to be a little bit more selective with your long ideas given the current environment. If you're looking at names on the short side, you want to look for overbought conditions, rallies within downtrends to open positions on the short side. So taking a look at our sector tracker movement over the last 5 days, you can see the defensive nature as the defensives occupy 3 out of the top 4 slots. Staples and utilities, the top 2. Staples up over 3% or about 3% in the past 5 days. Utilities up nearly 2%. A little bit of a rally in tech over the past few days has popped that into the top 3. Real estate rounds out the top 4, up 1.2% over the past 5 days. You can see that energy has been weak, along with crude oil pulling back. We talked about that a little bit yesterday. Materials just continue to be weak. This is really a function of A, commodities, and B, just weakness around the globe. If you look at what some of the major markets around the world are doing, it's not, they're in downtrends. It's not a pretty picture. Industrials down 1.5% over the past 5 days, and discretionary, we've talked about this one a bunch too. Strength there, a weakness there was being masked by strength in Amazon, and now with Amazon under some pressure, the weakness in discretionary is really coming to the fore. Our industry in focus today, capital market services, is over the past 6 months, this subsector has underperformed by nearly 14%, 13.84%. Its power bar ratio, which measures future potential, is neutral. You can see we have 4 bullish or very bullish stocks for 4 bearish or very bearish stocks. Group is actually ranked. Think about this and what I was talking about earlier, why a lot of the industry groups are weak. We have a group here that's balanced, 4 bulls, 4 bears, and it's the number 2 of the 21 subsectors that we look at, and it's moved up 5 slots over the past week. However, some of the indicative names in this group are actually weak. Wisdom Tree, WETF, is very bearish. Donnelley Financial is bearish. FactSet, FDS, is bearish as well. And if we kind of dig in on one of them here, let's take a look at Donnelley Financial here. Ticker symbol DFIN, closed 1602 yesterday. Actually an outperformer, up 69 basis points. Has a bearish rating. It's a weak trend in a weak industry group. So at the very least, we know that this is the type of stock that we want to avoid or potentially look for opportunities to open on the bearish side. Market and the model in agreement here. Here's the ribbon at the bottom of the screen and that very bearish rating, or bearish rating rather. Underperforming the market since late September, early October, and it's approaching overbought conditions. And what would be interesting here is if the rally and sideways action here is actually so weak that it doesn't produce an overbought condition and money flow stays bearish, I think that's a premium setup on the short side here. Maybe probably give it another day. Keep an eye on it. See if it does get closer to overbought or begins to actually turn lower, and that would be your trigger as far as I'm concerned. Stock is below a falling long-term trend line. 3 out of the past 4 earnings reports have been below expectations. They do report in about 2 weeks on Wednesday, November 7th. Keep an eye on DFIN. I think it's potentially getting close to a setup for a bearish trade. And if you own DFIN, I think you need to kind of ask yourself why you own it and see if your conviction level remains the same, given the factors that we've discussed here and now. Well, let's look at what's trending. Yesterday's S&P 500 movers and shakers, JEC up nearly 7% as they are selling a business unit. AMD up nearly 6% on rumor that Intel is pushing back the timeline for 10 nanometer. Investors are taking that as a positive for AMD. Praxair PX got some deal approval for a previously announced M&A transaction. No real news in Ralph Lauren that I can see that warranted a 3.7% pop higher. NetApp, bearish stock rallies 3.5%, but I will note that they did catch a downgrade from a sell-side shop today. On the loser side of the coin, Nectar, some comments about competition weighing on that stock, down 17%. SCG, potentially an unfavorable court ruling sends that stock down 11%. Bristol Myers just weak with the pharma group yesterday, down over 6%. And WRK was a stock that traded at a 52-week low yesterday. So, trends in motion tend to stay in motion. If you're looking for names to avoid, I would monitor the 52-week low list. WRK down 5.2% yesterday. A good example of that. Taking a look at earnings now, with the calendar really starts to heat up this week. Halliburton beat by a penny. It's a very bearish stock. Ameritrade neutral stock beats by 4 cents. Kimberly-Clark beats by 7 cents. And we're starting to see some of these consumer staples companies beat. Remember, staples are one of the sectors that's benefiting from defensive positioning and rotation. IQV beat by 3 cents, but could not hold on to an early pop. Before the bell this morning, we're going to hear Verizon. I saw their numbers come across the tape. They beat revenue, they beat EPS, but we'll hear what they have to say about guidance. Some other important names reporting before the open: Centene, CNC, McDonald's, MCD, Triple M, Biogen, BIIB, Caterpillar. Want to hear what they have to say from a big picture economic standpoint. Harley-Davidson stock trading higher. That was a bearish stock. They did report. Waters also reports this morning. After the bell, some of the important names to really keep an eye on: Texas Instruments for a read on the semiconductors industry, Juniper, JNPR. Let's talk about what's going on in networking. Ameriprise Financial, the financial's been under pressure. Obviously one that we want to keep an eye on. All of these stocks are neutrally rated and reporting after the close tonight. So now let's take a look at what we're talking about here. The Russell 2000, here's the IWM Russell 2000 ETF. And yeah, we're testing support. And it's a little bit of a good example of what we're looking for actually. We want to see this support level hold in the 150 to 152 zone, and we want to see a higher low in RSI and ideally a higher low in cheek and money flow to give us an indication that we are ready to reverse higher. However, there's still a lot of work to do. You have a fair amount of resistance overhead, below the 200-day moving average, below the 50-day moving average, which is now turning lower. The first point, though, is to hold this support level. IWM's testing it here, 150 to 152, key for the small caps. Utilities break out on a relative basis. So here's the XLU. On an absolute basis, we're trading in a resistance. Money flow is neutral. It's actually been waning, but look at the defensive positioning here. This is the XLU relative to the SPY, and we can see this clear breakout. Investors are positioning themselves in the defensive parts of the market while we wait for the market to stabilize, and this is really a clear indication that is in fact taking place. Look at the sideways action here, XLU relative to the SPY, and now we're breaking out. Keep an eye on utilities. And is software losing its leadership role? That's the question we want to ask here. We've been hopped up on software for a while. This breakdown, though, has changed the personality. It's now underperforming the market. Does have a neutral plus Chaikin Power Gauge ETF rating, but this underperformance worries us, especially as it becomes closer to overbought with bearish money flow below the falling long-term trend line. Keep an eye on the software group. So that's it for today. Sign up to receive free stock ideas every day. ChaikinAnalytics.com/today.